For generations,
10,
humanity
9, 8,
looked toward the
7,
night sky and wondered,
6, 5,
what is out there?
4, 3,
Can we reach it?
2,
Can we
1.
build there? Can we
Ignition.
create an economy
Liftoff
beyond
of
Earth?
Aries 1X.
Then
Testing
one
concepts
company
for the
changed the
future
question.
of new
It
rocket
was no
design.
longer, can we get there? It became, how fast can we get there? And what can we build when we arrive? SpaceX launches rockets, operates a global satellite network, carries astronauts and cargo, serves commercial customers and governments, develops artificial intelligence infrastructure, and now SpaceX trades on Wall Street. Following one of the largest initial public offerings in history, the company has delivered its first quarterly earnings report as a publicly traded company. Revenue surged, Starlink expanded, investment accelerated, losses continued, the stock is falling pre-market, and now hundreds of millions of previously restricted shares are becoming eligible for sale. So today we're asking the question every investor must answer. Is SpaceX building the foundation of the next industrial revolution, or has Wall Street already priced in a future that remains years or decades away? Today, we're going to the moon and back. Good morning, ladies and gentlemen, and welcome to another special edition of Wall Street Wednesday on the Unbearably Bullish podcast, the official podcast of the Bull You Can't Bear. I am your host, Donald Johns, and every Wednesday we go beyond the headlines to examine the businesses, financial statements, market forces, risks, and opportunities that are moving Wall Street, because here we believe in strong markets, stronger mindset, unlimited opportunity. Today's episode, folks, it's not about science fiction. It's about economics, capital markets, reoccurring revenue, infrastructure, technology, valuation, and one of the most closely watched companies on and off the planet. SpaceX completed its public offering in June, selling approximately 555.5 million shares at an offering price of $135 per share under the ticker symbol SPCX. The company said the proceeds would support satellite expansion, launch infrastructure, launch vehicles, AI compute infrastructure, and general corporate purposes. Now, following its public earnings report, investors are getting something that they had never had before, a regular look beneath the rocket. So let's begin with today's market pulse. SpaceX reported second quarter revenue of approximately $7.8 billion, representing growth of about 92% from the previous year. That number exceeded Wall Street's expectations, but the company also reported a net loss of approximately $541 million as it continued investing heavily in Starship, satellite infrastructure, artificial intelligence, computing capacity, and long-term expansion. Despite the revenue beat, SpaceX shares have declined approximately 10% in pre-market trading. That reaction teaches an important Wall Street lesson. A company can deliver excellent operating growth and the stock can still fall. Why is that? Because stock prices, they don't respond only to what happened. They respond to the difference between what happened, what investors expected, and what investors now believe comes next. SpaceX management said the company remained on track to reach an annualized revenue run rate of approximately $100 billion by the end of 2026. That is extraordinary projection, but extraordinary projections require extraordinary execution, and they create a very high bar for the company to clear every quarter. That brings us to today's bullish breakdown. So what business is SpaceX actually in? Most people still think SpaceX is primarily a rocket company. Well, that description is no longer complete. SpaceX now presents itself as an integrated platform operating across three major economic engines: space, connectivity, and artificial intelligence. The company designs and operates launch vehicles, and spacecraft, but it also runs Starlink, supports government and defense communications, and is investing heavily in computing and AI infrastructure. Think about SpaceX's three businesses sharing one technology platform. The launch business includes Falcon 9, Falcon Heavy, Dragon, Starship, commercial satellite launches, government missions, national security programs, astronaut transportation, cargo delivery, and future lunar and interplanetary missions. SpaceX's competitive advantage is not simply that it builds rockets, it has built a reusable launch system operating at a scale and cadence that competitors have struggled to match. Reusability matters because rockets have historically been treated like disposable vehicles. I mean, imagine flying from Miami to New York and throwing the airplane away after landing. That would make air travel extraordinarily expensive. Reusable launch vehicles attempt to change the economics of space transportation by spreading vehicle costs across repeated missions. But investors must remember lower launch costs do not automatically mean lower development costs. Starship is one of the most ambitious engineering projects ever attempted. It may transform payload economics if it achieves reliable, rapid, full reusability. But reaching that point requires enormous capital, repeated testing, regulatory approval, manufacturing expansion, launch infrastructure, and successful execution. Starship is the moonshot inside the moonshot. The second engine may be even more important financially. Starlink converts satellites into reoccurring revenue, communications, and network. That changes the business model. A rocket launch produces revenue when the mission occurs. A Starlink subscriber may produce revenue every month. Reoccurring revenue is valuable because it can be more predictable, scalable, and measurable than the one-time project revenue. Starlink serves residential users, businesses, airlines, ships, remote communities, emergency services, governments, military customers, and potentially ordinary mobile devices through direct-to-device connectivity. This makes SpaceX more than an aerospace company. It's increasingly resembling a combination of a telecommunications provider, a broadband network, a defense contractor, a satellite manufacturer, and a global infrastructure operator. The strategic advantage is vertical integration. SpaceX builds many of its satellites, launches them on its own rockets, operates the constellation, sells the service, collects subscription revenue, and can replace or expand capacity without depending entirely on an outside launch provider. That integration may create significant cost and speed advantages, but it also concentrates enormous operational responsibility inside one organization. Satellite replacement cycles, spectrum rules, international regulation, customer pricing, terrestrial competition, constellation maintenance, and capital expenditure all matter. Subscriber growth is powerful, but subscriber economics matter too. Investors should study revenue per user, customer acquisition costs, equipment subsidies, churn, network capacity, and the cost of maintaining thousands of satellites. The headline is subscribers. The investment analysis is unit economics. The third engine is the least traditional and perhaps the most controversial. SpaceX has positioned itself as an integrated business spanning space, connectivity, and artificial intelligence. Its public offering materials describe potential investment in AI compute infrastructure, including terrestrial and future orbital systems. That means the company is no longer asking investors to value only rockets and satellites. It's asking investors to consider computing infrastructure, AI platforms, data services, and technologies that may not yet have established mature business models. This creates optionality, but optionality can be difficult to value. When investors assign value to businesses that are still emerging, assumptions become extremely important. How much capital will be required? When will those investments produce revenue? What margins will they generate? Who are the competitors? What technological risks remain? And how much future success is already reflected in today's share price? A powerful story can support a valuation. Only cash flow can ultimately sustain it. Let's go to my investors toolbox. We're going to understand the SpaceX share lockup. Now let's discuss the issue that may create the most immediate volatility. This is the share lockup expiration, which happens tomorrow. When a company goes public, employees, founders, early investors, and other insiders are often temporarily restricted from selling their existing shares. Why? Because allowing every early shareholder to sell immediately could flood the market with supply. A lockup creates an orderly transition into public trading. SpaceX's structure is unusual because its share releases are staggered across multiple periods rather than concentrated into one traditional expiration date. Its offering documents establish different restrictions for Elon Musk, selected insiders, and other pre-IPO shareholders. Tomorrow, as many as approximately 912 million shares held by employees and other pre-IPO stakeholders may become eligible for sale. Folks, that does not mean 912 million shares will be sold. It means they legally become sellable. That distinction is critical. A lockup expiration does not change the rockets, the satellites, the subscriber count, the contracts, the engineers, or the company's technology. It changes potential market supply. Reuters reported that the first release could more than double the number of shares available for trading and potentially more than triple the float if a separate price-based provision is triggered. Additional releases are scheduled over time, with billions or more shares expected to become eligible by the middle of 2027. Imagine a concert with limited number of tickets. When supply is tight, buyers may compete aggressively. Now imagine thousands of additional tickets suddenly becoming available. The concert didn't change. The performers didn't change. The number of seats available for sale changed. That's the technical effect of an unlock. The market will now watch how many insiders sell, who sells, how quickly do they sell, and do long-term holders remain committed? And can new investor demand absorb the additional supply? This is why investors must separate two categories of risk. Fundamental risk changes the underlying business, and technical risk changes in supply, demand, liquidity, positioning, and market structure. A stock can decline temporarily because of technical selling, even when the company's operations remain strong. But significant insider selling may also affect sentiment because investors may interpret it as a signal. Context matters. Let's do the bull versus bear, and let's examine both sides. The bull case. The bullish case begins with scale. SpaceX has built a leading launch platform. Starlink creates reoccurring global connectivity revenue. Vertical integration may reduce cost and accelerate deployment. Government and national security relationships create additional demand. Starship may dramatically expand payload capacity and lower launch cost if the company achieves its technical objectives. AI infrastructure may create another long-term growth engine, and the broader commercial space economy is expanding across communications, defense, Earth observation, exploration, manufacturing, data, and infrastructure. The bull says SpaceX is not simply participating in the space economy, it's building the roads, vehicles, communications networks, and computing infrastructure that may power it. Now let's go with the bear case. The bearish case begins with valuation. Great companies can become poor investments when investors pay too much. SpaceX must fund capital, extend intensive projects across rockets, satellites, data centers, computing communications, manufacturing, and research. The company remains exposed to technical failures, launch delays, regulatory approvals, spectrum restrictions, international politics, government contract risk, competitive pressure, capital expenditures, execution complexity, and continuing losses. The share unlock adds another near term risk because potential supply may pressure the stock even if the operating business continues to grow. The bear says the company may achieve extraordinary things, but the stock price may already assume extraordinary success. And on Wall Street, expectations, they can become gravity. Let's talk about the new space economy. SpaceX is the center of today's discussion, but it's not the entire sector. The modern space economy includes several distinct categories: launch and space systems. Rocket Lab participates in launch services, spacecraft systems, components, and the development of its larger Neutron rocket. Satellite to phone connectivity. AST Space Mobile is building a satellite network designed to provide broadband connectivity to standard mobile devices. Lunar infrastructure. Intuitive Machines participates in lunar transportation, communications, data services, and NASA related exploration programs. Space manufacturing and components. Redwire provides space infrastructure, power systems, components, manufacturing technology, and mission capabilities. Earth observation and intelligence. Companies such as Planet Labs and Black Sky connect and analyze satellite imagery. Communications. Iridium Communications operates satellite communication services with an established global network. Traditional aerospace and defense companies. Companies like Lockheed Martin, Northrop Grumman, L3 Harris, Boeing, and others provide spacecraft, sensors, propulsion, communications, defense systems, and government mission capabilities. These companies are not interchangeable. Some are established, profitable defense contractors, and others are early stage growth companies that are consuming substantial cash. Some manufacture hardware, others sell data, some depend heavily on government customers, others target consumer connectivity. Never buy the space sector without understanding what part of space you actually own. Let's talk about indexes and space ETFs. Investors can also access the theme through exchange traded funds, but this is where due diligence becomes essential. There is no single universally accepted definition of a space company. One fund may focus on rockets and satellites, another may include defense contractors, another may hold telecommunications companies, semiconductor businesses, navigation providers, drones, or deep sea technology. The Procure Space ETF, ticker UFO, is one of the longest running dedicated space ETFs. The State Street SPDR S&P Kensho Financial Frontiers ETF, ticker ROKT, draws from a broader index framework that includes space-related businesses and certain other frontier technologies. Additional funds have launched as investors' interest is spiking in SpaceX and the space economy has increased. Reuters reported that space-themed ETFs attracted approximately $1.3 billion in new assets during one recent month, while also warning that many funds had significant overlap in their largest holdings. That overlap, it matters. Owning three different space ETFs does not necessarily mean you own three diversified portfolios. You may own the same companies three times with three different expense ratios. Always examine the index methodology, the holdings, the weightings, the percentage of pure space exposure, the fees, the trading volume, and the overlap with investments that you already own. The label on the package is marketing. The holdings inside the investment. Here is today's educational watch list. SpaceX, watch Starlink growth, capital expenditures, Starship milestones, profitability, free cash flow, and insider selling activity. With Rocket Lab, watch launch cadence, backlog, Neutron development, spacecraft systems revenue, and cash usage. AST Space Mobile, watch satellite deployment, commercial partnerships, funding requirements, regulatory approvals, and progress toward reoccurring service revenue. Intuitive Machines, watch mission execution, NASA awards, lunar infrastructure contracts, backlog, and cash requirements. With Redwire, watch space systems demand, defense exposure, acquisitions, margins, backlog, and integration risk. Planet Labs, Black Sky, and Iridium, watch the difference between collecting data, selling analytics, and providing communications infrastructure. And for the established defense companies, watch how space becomes one component of a much larger aerospace and national security portfolio. This is not a recommendation list whatsoever, folks. It's a research list. Let's do my hump day challenge. And here is your challenge this week. Choose one company connected to the space economy. Then separate the story from the business. Write down, what does the company sell? Who pays it? Is the revenue reoccurring? Is the company profitable? How much cash does it have? How much cash is it spending? What advantage does it possess? What could cause the investment thesis to fail? And finally, ask yourself, am I evaluating an operating business, or am I buying an exciting story? Because stories attract attention, financial statements reveal reality. Let's do my bullish takeaway. Space may be the final frontier, but valuation remains grounded here on Earth. SpaceX may be building one of the most important industrial platforms of the 21st century. It may transform launch economics, global connectivity, defense infrastructure, artificial intelligence, lunar commerce, and eventually humanity's presence beyond Earth. But great technology does not automatically become a great investment at every price. A disciplined investor studies the mission, the revenue, the margins, the capital requirements, the competition, the risks, the ownership structure, the share supply, and the valuation, because getting to the moon is difficult. Building a profitable business around the journey may be harder, and getting investors safely to the moon and back requires more than optimism. It requires discipline. I want to thank you for joining me for this special edition of Wall Street Wednesday. If today's episode helped you better understand SpaceX IPO lockups, earnings analysis, and the new space economy, share it with somebody who wants to look beyond the headline and understand the numbers underneath it. You can visit us at thebullyoucan'tbear.com for more episodes, market education, resources, and updates. I'm Donald Johns, and this has been the Unbearably Bullish podcast. Remember, strong markets, stronger mindset, unlimited opportunity. Let's connect, collaborate, and monetize. Follow the herd. And remember, the future may be written in the stars, but successful investing begins with research right here on Earth. Until next time, always stay unbearably bullish. We appreciate all you, and have a wonderful day. Educational and legal disclosure. The opinions expressed in this podcast are those of the host and are provided solely for general educational and informational purposes. This episode does not constitute financial, investment, legal, tax, accounting, or other professional advice, and is not an offer or solicitation, endorsement, or recommendation to purchase, sell, or hold any security, fund, investment, product, or strategy. References to SpaceX, SPCX, Rocket Lab, AST Space Mobile, Intuitive Machines, Redwire, Planet Labs, Black Sky, Iridium Communications, Aerospace and defense companies, exchange-traded funds, indexes, and other organizations are provided solely for educational and illustrative discussion. Investing involves risk, including volatility and the possible loss of principal. Newly public companies, thematic investments, aerospace businesses, and early-stage growth companies may involve elevated valuation, liquidity, operational, regulatory, technical, competitive, and capital market risk. Past performance does not guarantee future results. Financial figures, market prices, index holdings, business conditions, and regulatory circumstances may change after publication. Conduct independent research and consult qualified financial, legal, tax, or other professional advisors regarding your individual circumstances before making investment decisions. Have a wonderful day, and we appreciate you tuning in.